Hey guys, once again it's your boy Femboy, Effortless Gold Trading Room. So I'm back again with another video. So today I'll be showing you how I analyze step index. So step index is a pair that normally found when it's actually in a broker called Deriv. So they have like synthetic indices. Synthetic indices are indices that are made. They're like being created, so they are not affected by event like live events or the world events. So they just move on their own, and they also tradable during the weekends and stuff. So if you maybe are busy during the weekdays, or maybe if you be trading like currency pairs, you can use that time to trade. You can use weekends to trade these pairs. So they are not that hard to trade, guys, although they have tricky movements and stuff. So I'm just gonna go ahead and show you how I normally analyze. So as you can see here, so I'll be showing you how I trade with support and resistance, or how I analyze with support and resistance when I'm analyzing this pair. So far, as you can see here, let me use this. So as you can see here, we had a nice triple formation. So I'm just gonna throw it so that you can see, or highlight, or rather say, we had like a nice triple top formation there. So you can see here, we had like 1 2 3. So then the market started dropping, and we have another nice M, or another nice M. We have a nice M, which also indicate a bearish movement. So as you can see, market dropped and dropped. It didn't retest and came back, retested and pushed up, retested and continued pushing up. So as you can see here, we had like a nice movement that just happened. So we're highlighting our neckline. So why, most of you ask yourself, why would I highlight the neckline? So a neckline is often used when you're like trading patterns like double bottom, or double top, triple top, or double bottom, triple bottom. So those pairs, whenever you're trading them, to have like, or to get nice entries, you just have to wait for a retest on the neckline. Then if it comes back and respects that area, then you can take the trade. But yeah, so that's how I normally trade. So as you can see, market broke, came back, rejected, and went down, although it didn't like push down, because I would say maybe I'm targeting this area here, but it didn't actually push that much. So it ended up breaking the same structure. So we have like 2 touches, 3, then 4, of which this level is it indicates that this level is strong. So here we have a bearish channel. As you can see, we have 2 touches on the top, then on the downside we also have like 2 touches, as you can see here. So it wasn't like, so these levels were not that strong enough. Oh, we have like 3 on top, sorry, because it broke, then came back, retested. So this is also like same thing. So it's like a range, because most of you know ranging markets are normally like this. So this is how ranging market is, but it can also range like this, guys. So it also happens like this and stuff. So it's also the same thing, like, you know, the structure, sorry about that. It can also range like this. As you can see here, we have like a channel, a bearish channel, which is not bad. So I don't trade channels that much. I normally use them to see if or how is the market moving and stuff, just to confirm. I don't like use them for trading that much, because I don't feel comfortable trading trend lines. See, that's another thing. But yeah, it is good for analysis. It is good for analysis, I won't lie. So I'm just gonna carry on. So as you can see here, the market was like consolidating a bit. We had our resistance there, so I would like wait for it to see if it breaks. If it breaks on top, then I would wait for it to come and retest, then continue up, or come and retest, push up, then push down. So it would depend according to the structure. So as you can see here, I would also put like my support area to wait. If it gets broken, or if it breaks the structure, then I'll wait for a retest. So those are the things that I'll be waiting for here, although it takes time for it to retest, since this is daily time frame, guys. So as you can see, it's 24-hour time frame, so 24 is equals to daily. So what am I seeing at my left? We have that resistance. We have a resistance level that was broken here, right? So it was broken. It was broken here when the market broke up, then came back. We never, or it didn't get a clear retest, although it did retest a bit on the upside, then push down again. So I see this as a potential a retest for now. So I knew this is a daily time frame. So yeah, so what am I seeing here? I'm just gonna identify the structure, or just explain a little bit more about the structure. So here we had the bearish channel, so we had a higher high there, then we have a lower low, lower high, or higher low, sorry, then lower low, lower high, lower low, then price broke the previous lower high, then we broke again the second one, the third one, we broke our resistance level, then the market came down, pushed up again, kept on rejecting, then pushed down. So we had a higher high, a new higher high, then came back, created a lower low and a lower high. So now we are going toward to create a new lower low. So if when the market gets here, let me highlight this, the area that I'm actually targeting here, we might expect to see some bullish movement occurring, so pushing, maybe seeing the market pushing up on the upside and stuff. So this is just a daily time frame. I normally use it for long-term structures, or to be it's good to always be updated with the structure that you are trading. It's easy when it comes to entries. You know what to look for. That's what I like the most about trading, that these kind of structures. So we're just gonna move to H4. We're just gonna move to 4-hour time frame. So to those who don't have accounts, the link is there on my channel. It's there, it's written Deriv, so you just click there, it will put you straight to a Deriv link. Then when you get there, it's gonna require you to open a Deriv demo account. Then from demo account you upgrade to real. So from real, then you'll be able to trade with real money. So that's how it is, guys. I don't know why they did that, but that's how it is. You first have to create a demo, then from a demo you upgrade to a live account or a real account. So if you're having any problem, just let me know. I'll try to assist, maybe if I have, like, you know, if I can help and stuff. So what am I expecting? I'm expecting for the price to push down here to this resistance level. I'm also gonna add this one. I also gonna add this one. It's also a support, so which was respected. That's nice. So now we kind of like gonna break. Then this will be my first target to enter. If I happen to enter here on this resistance level, this will be my first target. then second target. So first TP, second TP, then yeah. So that's what I'm expecting, a drop. So switching to smaller time frames, you might see a lot of things here as well. So as you can see here, as you can see, it's the same thing, it hasn't changed. Market has been consolidating, but on smaller time frames it was kind of like ranging, so it's not like kind of like the same, but it's like, you know, ranging and stuff. So for entries, if I were to look for entries here, there's actually nothing, guys. I won't like lie to you, because you can see the market is ranging, consolidating, sorry. So the market is consolidating as for now. As you can see here, it's just consolidating. We don't have like clear direction to say where sorry, to say where should we enter, or where are we gonna enter and stuff. Although we have that small zone inside it, that small resistance, current resistance, but I wouldn't be, it's not wise to trade inside the consolidation area, because there are a lot of chances of you being taken out. So please, guys, like, make sure you do analyze, guys. Don't just jump on to taking trades and stuff. So as you can see, we have that resistance, or I can just move it up here. So what happens if I move it up here? We get this pattern that I was telling you about, triple top. As you can see, the we have first touch, second touch, third touch. Price is now moving down, or it's now pushing down. So but still, guys, it's not smart, or I wouldn't say it to be wise to trade this market, because it's in a ranging zone. Although you can like use these opportunities if you have like small accounts to scalp, but I wouldn't advise to like take a long trade, or when you're like a day trader, to trade and hold for long, because anything can happen. It can just push up and take you out. So yeah. I normally use one H1 15-minute time frame for entries. That's my last time frame that I use. So when it comes to like trading and stuff, so there's a lot that I normally do before I enter. I use smaller time frames to trade or to enter. It helps me with minimizing the risk. So like it does actually help me to minimize the risk. Let me put it back to where it was. So as you can see, so as I said, I don't like trading I don't like trading using a trend lines to like for entries, but I normally put them to find zones. Sometimes when the structure is like when the market moves like this, you happen to get like retest when above or what. So if I happen to get that retest, I look for zones to draw, because I trade support and resistance. That's who I am. But I also use this for like, you know, for more confluence when trading or when looking for entries. I also use Fibonacci. So Fibonacci, where is my Fibonacci? Oh, there it is. Okay, so I also use my Fibonacci. For example, since the market is pushing up, how do you see that the market is pushing up? It's simply easy. We have a lower low, higher low, higher high, higher low, higher high. So you see the market is pushing up already. That's a signal. Although I wouldn't like draw everything, but it's just to show you that the market is indeed pushing on the upside. So how do you trade using Fibonacci's or Fibonacci tool, it's very easy. Drag it from the low then to the previous high, right, when the market is still falling, and wait and see if there is any, if price is respecting. We have like two areas here. They are marked as like on gold, so I have like 50% and 61.8. so those are the two areas that I normally take entries from. So as you can see here from 61.8, I wouldn't actually take a trade here because we kind of had a fake out. So with fake out, sometimes they tend to form, then when you enter then they take you out, so that's another thing. So I normally don't like trading fake out trades or something like that, so to avoid those kind of things. So as you can see here, it came faked out a bit, then pushed up. So this was gonna be my entry on 50%, because you can see here price pushed up, rejected, pushed down, rejected again, then pushed up. So if I was like looking for scalp trades, I was gonna like maybe put my my entry or place my entry there. Take profit obvious, like the what you call the previous high, then place my stop loss here. Why am I placing my stop loss here? It's pretty easy, guys. So if price pushes pushes back here, there will be no momentum on the bullish side, so that would be the signal, or that would be a sign, or that should tell you that buyers are actually losing power or losing control. So a lot can happen, guys. If it comes here, for me, I would like say that the buyers are losing power, so to continue pushing the market up. So it's like a clean trade, less risk. So yeah. So what about this trade here? It's also the same thing, guys. You see it faked out a bit. I wouldn't like place my trade there. What would I do? It's very easy. When I'm trading here, I would go to smaller time frames. Okay, here we have like 10 minutes. There's also 10 minutes on what you call on MT5. Only if you are using a desktop you can add them. You can just go to time frames and then click the left button, the right button on your mouse, then it will show you customize. Then you can add time frames like H8, H6 and stuff. So if like you use them and stuff, you can like it can be advantage, so you can also use them there. But yeah, so as you can see here, it helped a lot to move to like smaller time frames. So what do you see here? We have like a small M, although it's hard to identify it. Okay, I'm just gonna put the neckline. We have a neckline, nice neckline. I'm moving to lower time frame so that you can see the M I'm talking about. So we have this M here. So there is another thing, guys, like you know, when you're trading you have to open your eyes. There are some patterns that will be there, but since most of you want like clear things, then you lose opportunities. So as you can see, we have that M. I've placed my black line there as a neckline. Price push back, then push down. So it's like as easy as that. The moment the price rejects rejects the area and stuff, or start to show that there is a bearish, I would enter there, guys. That's where I would enter. Then where would I put my stop loss? Simple. So when I'm dealing with trades like this, what I normally do is okay, so I'm just gonna okay, so I'll put my stop loss above the current resistance. Why? it's simple, guys. It's because if price can, or the candlestick can push up here and take me out, can put it like there are probabilities or possibilities of the price coming back to where I entered and take me out maybe around there. And another thing, guys, if price continues to or reaches this level, that would also show that buyers are in power and sellers are actually failing to push the market down. So it's very easy, it is easy like that. Then we go back to, oh, remember guys, I spotted that on 10-minute time frame, so I would use this time frame for maybe stop loss and stuff. So I'll just switch to smaller time frames for entries, so and place my stop loss here. So this area here will be my stop loss area, sorry, my take profit. So this would be my take profit. Put my take profit there, because there are many probabilities of the market pushing up and stuff. Mind you, this is like, these trades are for scalping, these setups are for scalping, guys. It's not for like day trading and stuff, because mind you, the market is consolidating and it's not wise to trade consolidating or when the market is consolidating. So those are the things that you should avoid, because they can, it will become a habit to do it. If you continue doing it and stuff, then you end up losing your money and stuff. I know that thing, it happens. I know the feeling, so like I know what I'm talking about. It happens to most of the traders, so make sure it doesn't happen to you. So yeah, so that's my first take profit. So my second take profit will be this one, this area right here. So this will be my second TP. So I can, let me add again. So this will be my, I don't know if it's, okay. So this will be my my second TP. So it's easy like that, guys. Mind you, the thing I said with step index, once it moves to that certain direction, it moves nicely, guys. I won't lie to you, like it's very very easy. There is nothing hard or anything. So by the time, if you enter, then if you happen to enter, then the price moves into your direction or into your favor, make sure to trail your stop loss after some, like maybe I would say after the market has moved maybe for like 15 pips, then you can trail your stop loss, so that anything happens, you don't make like huge losses. Mind you, guys, trading is also trying to avoid making losses or big losses. It's all about managing your risk. So it's simple, guys. There's nothing hard, I won't lie. So you just have to stick to your analysis or stick to your strategy. If you're taking losses, it's fine, guys. It happens. It doesn't start with you, like it happens most of the time. So you just have to close, or whenever you're seeing that the price is about to hit your SL, just close the trade, cut your losses early. Yeah, it doesn't help you to try and marry trades, to hold trades that can like screw you over in the long run. So you just have to just cut the losses early, then continue with trading. So that's how it is, guys. This is how I analyze step index. I'll do another video on how I analyze volatility 75. It's also similar, it's the same thing. It's also a synthetic indices. So yeah, it's very very easy. So there is also a link to my Telegram group where I normally drop signals and stuff. but for now I'm still working on this YouTube channel. I'm trying to grow and upload as many videos as I can and stuff. So so yeah, make sure you like, subscribe, comment if you have any questions. I'll do maybe a video after, maybe like I get some more viewers and stuff or more comments. I'll do a video or a Q&A where I'll be answering questions based on how I analyze, and I'll also do another video on the follow-up on the competition that I took for December, where I'll be explaining how it went. So here guys, see you on the next video. Make sure you use or you apply these things that I've taught you. I'll do another video now, getting deep to what you have to look for when you are about to place any entries or any trades. So see you on the next video.